Well, good afternoon. My name is Eric Levinson, Head of Business Development for VinaCapital. And today we're here to discuss the mid-year results for the Vietnam Opportunity Fund, calendar ending December 31st, 2022. We're joined today with VinaCapital Chief Investment Officer and Head of Portfolio Management for Vietnam Opportunity Fund, Andy Ho, Portfolio Manager Con Vu, and VinaCapital's Chief Economist, Michael Kokolari. And so today we're going to cover a couple of things. We're going to cover about 5 minutes on the Vietnam economy. And keep in mind, we have our regularly scheduled quarterly webinar a week from Wednesday, so there we'll spend more time on the economy and the market. And then we'll turn it over to Andy and KV to talk specifically in more details about the fund. So with that, Michael, why don't you give us maybe 4 or 5 minutes on kind of your view on the economy today?
Sure. So the way things are playing out this year so far is more or less what we had anticipated. Basically what we see is that there's a pretty precipitous slowdown in the demand for made in Vietnam products. You see that Vietnam's exports are down about 10% this year. And earlier this week, we've had data from Taiwan, Korea, some other countries, and we see that this trend will likely continue as the year progresses. On the other hand, that's being offset by the fact that consumers are still quite resilient domestically. We have a lot of tourists coming back. And the other thing that we're optimistic about is that there's been a pickup in the infrastructure activity in the first part of the year. So we're hoping that's going to continue as the year progresses. Now, on the inflation front, we've seen that inflation in Vietnam remains very modest. And because of that, the State Bank of Vietnam, that's one reason why the State Bank of Vietnam was able to cut policy interest rates. I said cut, and this is at a time that most countries in the world are raising rates. We actually cut interest rates by 1 percentage point 2 weeks ago, and that's because inflation is modest and also because the value of the dong is quite firm. So it's generally a quite positive economic backdrop for an investment point of view. So.
Oh, terrific. Well, thank you. Well, that brings us to the heart of this call, which is the discussion into VOF. And so we're going to discuss 3 topics. Number one, recent valuation adjustments in the private equity holdings. We'll discuss investment activity the last 6 months. And then very importantly, a fee reduction that we've recently undertaken along with the board. So Andy, in conversations I've had recently with family offices and institutional investors, there's a very similar comment that I get all the time, which is they're curious in their conversations with the private equity funds that they own. There's this disconnect where public equity valuations have come down, but somehow private equity valuations are the same or sometimes even higher, and they feel that there's a little bit of a disconnect. We've recently made an announcement about an adjustment we've made to several of our private equity holdings. Can you comment on why we've done that?
Yeah, thanks, Eric. We need to fairly value our portfolio, and it has to be done in a timely manner. Okay? So you're right. Recently, we've had some adjustments to the private equity portfolio, and it's really along the lines of us activating our downside protections. And as you can imagine, in businesses in real estate space, because real estate has had a very challenging year, and I think it's going to continue to have a bit of a challenge going forward because of the liquidity crunch and the interest rate environment. Okay. Having said that, the other private equity holdings, non-real estate holding in our portfolio, have done fairly well. But net, yes, we've had downward adjustments in the private equity portfolio.
Now, in the announcement, we discussed specifically Novoland Group, and that's obviously been a company that's been in the press. Can you comment on some of the conversations you're having with them as it relates to downside protection?
Yes. Again, we have sold our holdings, have put back our holdings to them, redeem our holdings, if you will. And they're going through the process of working with us as to, one, how do they pay us in the coming months and years, and what sort of collaterals or assets they have to back up the commitment to pay us. And the other options we have to evaluate is it possible to swap the assets for real estate assets, for the commitment that they need to honor to VOF.
And so interesting as we talk about the unique value proposition of VOF, I think this environment, it kind of plays perfectly, which is you hope it doesn't have to happen, but you have downside protections for all the private equity holdings. Is this kind of what you think about as you think about investing?
Yes, this has been our strategy for the last 10, 15, almost 20 years, if you will. And it's the strategic value that we bring to our shareholders and VOF. And you're right, we hope we never have to activate the downside protection. And by and large, we haven't had to. And unfortunately, in late 2022, the interest rate environment has been very difficult for the real estate space. And as a result of that, we have chosen to activate our downside protections in the best interest of VOF.
Interesting. Okay, well, the second question is, a lot of people say, well, what have you purchased or what have you sold in the last 6 months? So as we think about calendar year ending December 31st, what was the activity like in the last half of 2022?
Yeah, I think during 2022, the activity was on the slower side, I would have to admit. We did have an exit, a pretty nice exit. We sold the largest PET bottling company to Indorama out of Thailand/India. That was late last year. And then early this part of this year, we enter into an investment into the largest media platform in Vietnam. And so we're excited about the private equity investment opportunities going forward. But yes, last year's been a bit slow. I think it's because of the economic uncertainties and challenges that Vietnam faced. And the market was down almost 30% during that period, right?
So, one of the things we talked about in the preparation for this call is private equity valuations overall. And is it harder to actually appropriately assign a valuation? Because one of the things we talked about is that the good companies, maybe their valuation is still high, and I'll use the bad companies in quotes, no one wants to buy them, and so you really don't know what their valuations are like either. So from a standpoint of, is it that it's hard to look at the valuations because there isn't enough activity, or people just don't want to make deals?
I think if you're going to use transactions in the market as a benchmark to value, typically what you'll see is the companies that are doing well will have new investors, and they will get a valuation because there was a transaction. And typically the valuations tend to be still very strong for them because they are performing. Those that are not performing in this market aren't going to get any interest from investors, and as a result, they aren't going to get any sort of transaction value or trade. And so what you have is a situation where the numbers that are coming through tend to be on the higher, let's say on the multiple basis, PE or EV to EBITDA. But you can't blame them because they're still doing well, and financial investors and strategic investors still have an interest to invest in these businesses. And then you're not seeing any of the low-performing businesses raise money. And as a result, when you see the numbers, you tend to think that everything is still very positive and rosy. Well, the reality is some companies can't raise money at all, and they're not going into the market. And those that are raising, they are raising at a pretty high multiple.
That's a great point. I think that's very important because when people talk about PE valuations being high, the only deals that are being reported are the ones that are, I don't want to say expensive, but attractive for the sponsors. And whether they can't raise money or they just don't want to raise money at a lower valuation, yes, so they can keep their higher valuation that maybe they had in the previous round.
Yeah, that is true. The way we value the private equity holdings, we also have to look at the cash flow.
Yeah.
These businesses, what kind of cash flow do they generate? And we do a DCF model. We can look at the discount rates, et cetera, in combination with looking at multiples that publicly trading companies are valued at as well. So a combination of many factors do come into consideration when you're valuing a private equity business that by and large don't have any sort of public transactions or M&A transactions to benchmark against.
No, that's really helpful, and I'm sure during the Q&A period we'll talk more about that. So if you do have a question, please type it into the chat function. I've got the iPad here. I'll be able to read the questions. And the next topic, and I think is really important, is along with the board, we've recently announced a fee reduction for the portfolio. So Khan or KV, can you please walk us through the fee reduction?
Yeah, I mean, the objective of this fee reduction is to reduce the overall fees and make VOF remaining a very compelling value opportunity for our investors. So essentially what we've done is reduced or addressed 4 key areas. Number one, we reduced the management fee. And if you recall, the management fee is on a tiering structure. It started off at 1.5%. It's reduced now to 1.3%. So effectively, if you look at the first $1 billion of assets under management, the management fee has gone down from effectively 1.37% down to 1.3%. Number two is we've reduced the incentive fee. So the incentive fee now is reduced down to 10%. And then the third thing is that the hurdle rate, the annual compound hurdle rate that we have to earn above, that's increased to 10%. Right? So they're the key elements. In addition to that, several things remain the same. The cap on the incentive fee paid out every year remains at 1.5%. the clawback on fees that are remaining, they can get clawed back. That mechanism still works, and we've seen that work in recent years. And finally, 25% of everything that we earn in incentive fees, we've got to use that and buy shares in the fund. So that alignment of interest remains. And in addition, we now have to hold that for at least 5 years, those shares.
I think one thing we should make clear that because of the cap, the surplus that we didn't earn for the year can be clawed back if the performance of the fund is much lower than expected.
So you don't basically take all the money in the first year and then run. It's like if you don't do well in the second year,
Yes.
it comes back.
That's effectively the callback.
Yeah, and I think that's important because ultimately what this entire portfolio is about is creating alignment with shareholders. And so when we talk about a fee reduction, talk about the clawback, owning the shares for 5 years, I think each of these steps create more alignment with long-term shareholders, which I think is ultimately what we're trying to accomplish.
And keep in mind, we as individuals are shareholders as well as the firm.
Yeah, terrific. Well, that concludes kind of our, I guess, our regularly scheduled comments. So again, please, if you have any questions, type them into the chat function. I see a couple coming in here, so I'll just give it a minute, and then we'll ask the first question. I already see one coming in to you, Andy. Now, Andy, I know I said I was going to go to you, but I'm looking at the iPad, and frankly, more questions came in from Michael, probably because his comments were actually quite brief. So we're going to go to Michael
For a change.
first. Yeah, I know, for a change. And apparently people want to hear more. So let me put my glasses on here. All right, so the first question is about inflation. Why didn't inflation go up more? And I think even in previous comments, you've talked about inflation actually increasing this year.
Yeah, so there's a couple things going on. Let's say there's kind of three main factors. The first is that when you think about the overall inflation picture, both in Vietnam and the world, and this is something we've talked about before a bit in our webinars, the source of inflation generally in the world kind of links back to how much governments spent on COVID. They printed up a bunch of money and they spent it. And we didn't spend a lot on COVID. So just the general and we didn't need to because the economy is sort of intrinsically strong. So the general backdrop was already not highly inflationary here, like in the US and Europe. That's one thing. But more specifically, two things to think about. One is that we've had this phenomenon called the African swine fever, the pork prices. Long story short, the way that's working out is pretty good for inflation this year. Pork prices are actually falling year to date. That's one thing. Pork prices in China are falling particularly steeply. And then the other thing is, on the topic of China, where our food price inflation gets quite influenced by what's happening in China. And what we've seen is that the reopening in China so far has not been as kind of dramatic and robust a reopening boom as we've had in other countries. And one consequence of that is that inflation in both China and consequently also in Vietnam has been kind of modest, basically.
Okay. So as follow-up to that, one part about inflation that I'm just curious if it's linked, is there's been mixed reports about the strength of the reopening of China. Yeah. And so we've seen tourism boom, in a sense, here in Vietnam, but it looks like a lot of more Western tourists, Chinese tourists are just starting to come in. What are you hearing about the strength of the recovery?
Right, that's a really
the reopening is supposed to recover.
Right, yeah, that is a really good point. You do hear more reports, both in the news media and also at a granular level, kind of bottoms up information, that the reopening boom in China is not going as strong as what people had anticipated. Now, for Vietnam, as far as Vietnam is concerned, I do notice that there is some confusion among some people who watch the economy here, drawing a distinction between what's going on with Chinese tourists and the fact that what's going on with China's economy. The main benefit that Vietnam will get from the reopening is a resumption of Chinese tourists coming here. And I think that's going to happen irrespective of how strong their economy is. The other thing that people focus on is that there's a lot of two-way trade between Vietnam and China. So there is some concern that, if the China reopening boom is not going as strong as what we expected, will that negatively impact Vietnam? And the answer to that is no, because the trade that happens between China and Vietnam, with some specific exceptions, is generally kind of two-way trade in the garments industry and in the electronics industry. So the ultimate consumer of those products is in the US. So we kind of import production materials from China, we make the final products, and we sell them off to the US. So we're not so concerned about what's going on with China's domestic economy, but the tourism boom looks really good, though.
Excellent. So we're going to come back to you because I see more questions for you, but you're not the star today. We've got the star, Mr. Ho. So Andy, you talked a bit about the pricing adjustments. We also talked about some investment activities in the past. Importantly, what does your pipeline look like today?
Thanks. Yeah. When we look at our pipeline, one of the factors that we need to consider is the attractiveness of the sectors. We look at the various sectors in Vietnam. Vietnam in general is very attractive, as you may know, growing at 6 to 7% per annum. But we also look at the sector, the risk-adjusted returns in each of the sectors. And then from there, we identify companies within those sectors that we like. At the moment, obviously, we like logistic businesses. We always like banks. Banks is a big component of the economy. Healthcare is also very important. So needless to say, we are looking at banks. We're looking at a couple of logistic businesses at the moment, as well as healthcare. We have been a big investor in healthcare in the past. We've done one hospital system and we've exited. We have 2 hospital systems in our portfolio today. I hope to have some relatively good news during the year about those assets. And then we hope
when you think pipeline, you think about entrances, but also exits?
Of course. And so in terms of potential investments, we have a couple in the healthcare space as well over the next 12 months. But I have to caveat this, with the current interest rate environment that we're in, and the challenges that Vietnam as well as the global market faces, we're being pretty diligent about our approach to some of these investments at the moment.
So, a follow-up to that, you talk about diligence, so you talk about, obviously, the world is going through various challenges, and we've recently written about Silicon Valley Bank collapse and its kind of muted impact on Vietnam, but is this
forcing you to even think about either different downside protections, and are you either maybe adding different types of protections to the negotiations?
Yeah, that's a good question. I've had a lot of people asking what are the impacts from this to the collapse of some of the U.S. banks as well as European banks. Well, we work closely with Mike and his team as well as Ismail and his research team as well. At the moment, the direct impact has been very little. So we're not changing too much in terms of looking at these investment opportunities in our terms. But the indirect impact seems to be about the flow of money coming into Vietnam or out of Vietnam. That seems to be the impact that we're keeping an eye on. And now why is that important? Because if you think about the flow that comes into Vietnam, it represents an exit opportunity for us. When there's a low level of interest or a low level of flow coming into particularly strategic buyers, it leaves our opportunity to exit pretty limited. At the moment, we're seeing very strong interest in Vietnam, particularly on the strategic side. I think it's because people still view that Vietnam is almost 100 million people market that's growing at 6 or 7% per year for the next 2 to 3 years. It's still a very attractive economy.
Well, in fact, a question just came in here about this that I was debating asking follow-up, but since it's coming in, I'll definitely ask it, which is, can you comment on Sumitomo Mitsui buying 15% of VP Bank? What are your views on this? Does it have wider ramifications for foreign investment from corporates into Vietnam? And that was just announced today, I believe.
Yeah, I think that's very positive. As you probably know, these discussions have been going on for a year or so, and SMBC have taken a large stake of a subsidiary that belongs to VP Bank, the consumer finance business.
FE Credit?
FE Credit,
Yeah.
That's right. And their involvement at the holding company, the VP Bank, I think it's very positive. As you probably also know, that a lot of these banks have been caught up in lending to the real estate sector, and by SMBC putting new capital into the business, it certainly strengthens the balance sheet and the capital base of the bank. So I think it's very positive. In addition, the valuation that we're seeing coming through is very strong, and it comes back to the earlier comment that you and I had. We're seeing transactions, and the valuations are very attractive.
Because the good companies can command either a premium or an appropriate price.
Exactly. So it's not a real good indication of the general transaction. It's just an indication of what's happening in that specific area.
Yeah. And thank you for the question as well.
And if I could add, VP Bank is a top 10 holding in the VOF portfolio. We've held on to this bank for several years.
10th
now.
holding, in fact.
In fact, it is the 10th holding. It just makes it in the top 10.
All right.
So, Michael, I'll go to you. A question came in, not a negative, but I think it's an important question, which is, so obviously lots of risks in the world right now, and a potential U.S. recession or European recession, et cetera. If there is a global economy and if it continues to slow down, is that a risk to the Vietnam FDI story? And do you see inflows slowing down as well?
No, not at all. I think when we think about the corporations facing pressures because of a global recession, for example, their first instinct is to try to cut costs. And this would be kind of the most obvious way that you'd want to cut costs is by moving your production to the place where you have cheaper wages. And by the way, you see this also with, I would say, both Mexico and Vietnam. I would expect to stay Mexico may be more for car parts and things that are heavier, and here more for electronics and lighter things. But no, I think the evidence is pretty clear that, that it stays resilient. And what we've seen so far, I mean, it's only the first 2-3 months of the year, but what we've seen so far is it's basically fairly flat compared to last year, even though last year was a good year for FDI.
Yeah. And I think the other part of it, and we get questions even still, China plus one, is it a last year thing, is it a this year thing? It's probably a 10 or 15 year kind of movement. And so because of that, you may have a global recession, but companies with a 10 or 15 year plan,
right?
Maybe they could access something cheaper, because everyone we talked to Lego, the CEO of Lego said they want to be here for 150 years.
Right.
And so this isn't about
what's going on this year.
And unfortunately, it's also a geopolitics thing,
Sure.
which is not our domain of expertise. But just when you look at kind of the way things are playing out in the global chessboard, Vietnam is really ideally positioned
so
to.
quick follow-up question,
Yeah.
because you said the word geopolitics.
Yeah.
The question came in from somebody here. Global political tensions seem to be escalating with Xi Jinping visiting Russia last week.
Yeah.
Does any of this present risks for Vietnam?
Yeah, in fact, it's the opposite. I mean,
Okay.
if you look the last couple weeks, last couple months, I mean, things are really heating up, and that's a whole rabbit hole by itself. People can look into that topic by themselves. But I think the key point is that Vietnam is in a very good position to kind of be friendly, with the U.S. and benefiting from the whole what they call friendshoring, the U.S. manufacturing moving to places that are considered friendly with the U.S. But at the same time, we're also have a good relations with China and that whole story. So it does look like we will be a place that more factories will come here. You see that last year, Catherine Tai, the U.S. Trade Representative, kind of asserted pretty firmly that the tariffs on China's exports to the U.S. are not going to go away. And we also see quite clearly that the U.S. has really gone out of its way to economically engage with Vietnam and to stay on really friendly terms. You see more and more high-level people coming to visit here now.
In fact, I think last week was the largest ever delegation of U.S. companies
yeah.
that were here. You had
Yeah.
Meta, you had
Netflix,
Boeing.
Star, what's that? SpaceX.
SpaceX.
Yeah.
Yeah, I couldn't remember that.
And when you,
SkyX.
it's interesting you say that, because when you see that kind of big delegation, that's a G to G. That's a government to government. So it shows that the effort that they're putting to keep a good economic relations with Vietnam. So we should benefit from all this.
So we've kind of had a mix of the 30,000 foot level, a little bit of the portfolio level. KB, let's bring it down to more of a portfolio level again. So here it is, it's Monday, March 27th, but we're having the interim results through year-end, December 31st. How was performance of the portfolio?
Yeah, so as we discussed in the results, the NAV did decline about 14.5%. Now, if you look at the index as a reference, we are not benchmarked to the index in any way, but as a useful reference, the index also declined by 16.5% during that period. What really has been able to contribute to that, I guess, that outperformance,
Small bit of alpha,
to the index is one. I think the selection and the listed public portfolio of about 15, 16 companies. These are companies like VP Bank we just mentioned. We've invested in for a long time. They've been robust. They've been able to perform well in this recovery. Number two, if you look at the private equity portfolio, in fact, what has happened in the private equity portfolio, we've actually seen a very slight, but an increase in valuations. Again, testament to the quality of the companies that we've invested in, and the strong management being able to bring these companies through COVID, but also post recovery and able to demonstrate they're able to get back to business pretty quickly, and the valuations reflect that. And finally, of course, we mentioned earlier about some of the adjustments we've made to the public equities with private terms. Those adjustments, those valuation adjustments, are very much in line with the index adjustments. So again, within the overall performance of the portfolio, our efforts to focus on private equity and private equity investments, those are the ones that should give us that long-term performance going forward.
In actually delivering the outperformance with those adjustments as well, which I think is very, very impressive.
Okay. Well, Andy, that gives us answers to all the questions. But before we end the call, why don't we just ask you for some closing comments and maybe some forward-looking view on the portfolio?
Thanks, Eric. I think most of you recognize that, and I wrote this in my CIO note, that this year is going to represent quite a bit of volatility in the stock market as well as the economy. And we're seeing that. We're seeing quite a bit of volatility as well as reduction of trading volumes. Okay? So what we need to do is look forward is when does it change? What are the factors that will improve the volumes and the valuations, the interest in the stock market, if you will? And one of the key things that we've been working with Mike is looking at the interest rates, liquidity. We need to see a meaningful decline in deposit rate, lending rates. That's about a 2 to 3% decline. Right now, it's quite attractive to put a local currency deposit in a bank and earn 8 to 9% over 6 months. So that needs to come down. And that's going to help margin lending. That'll also help businesses borrow to invest for the future. And we also need to see some changes in the regulations around land, real estate laws, and hopefully that'll come about this year.
Changes in regulation or just faster approvals?
Faster approval, the taxes, land tax, a lot of things have to be worked out so that's more efficient and faster. And hopefully that'll work out this year, and that will be a catalyst for some sort of uplift in the latter part of the year. That's my hope. And in thinking along that line, our private equity pipeline will be adjusted accordingly in terms of when do we make the investments in the areas that we make the investment. And obviously we want to focus on businesses in logistics where FDI is coming in. Banks would do better as they're able to lend better, and NPLs come down because interest rates have come down. So there are various things that we're thinking through and to invest in, as well as to exit in the coming months. And as the economy changes, and interest rates come down and policies get revised so that things can move forward quite quickly. So I'm quite bullish towards the end of the year and in 2024, but I have to remind all, we do feel that there's a lot of volatility till then.
Yeah, and it is interesting because in our role, oftentimes we see a lot of folks. There was just a sell-side conference a few weeks ago, and the amount of interest in Vietnam, whether it is asset managers who want to invest directly or institutions that want to do private equity and venture capital, it is not just a pre or post-COVID, people can travel to Vietnam. Like, there's so much money that wants to come into Vietnam right now. And it's just amazing. And so kind of the commercial for VinaCapital is we've been doing this for 20 years. We've got 200 staff members. We have competitive advantage. And so I'll just, it's just really interesting when people say, oh, I want to do it from someplace else. And then we say, well, here's our staff and here's our track record. They're like, can we give you money? Because it's, why do they want to compete?
And you're right. We do expect some strategic money to come in. The SMBC is one of them.
Yeah.
We do expect in the next couple of weeks more announcement on terms of strategic investments in Vietnam. And these are large amounts, over $1 billion. So we do expect that. So bottom line is there's quite a bit of interest from strategic investors for the long term and deployment in Vietnam.
Yeah. Well, Andy, thank you so much. Con, thank you. And Michael, thank you. So that concludes our VOF call with our interim results. I will encourage you to dial in next week, Wednesday afternoon or Wednesday morning if you're in Europe. Michael, Ismail Pili, our head of research, and myself will do kind of our standard quarterly webinar where we'll cover our views on the economy as well as our view on the listed equity market. So gentlemen, thank you so much. And to all of you that joined us, thank you very much, and speak soon.